It's awesome. Thanks so much. So talking about that real estate that Lynn was just speaking about. Next up, we've got Tyrone. Tyrone is one of the investment consultants, and he's really just going to take everybody through some of the current opportunities that are on the Wealth Migrate platform. So thanks, Tyrone.
Thanks, Kevin. Hi guys, I'm Tyrone. I'm one of the global investment consultants at Wealth Migrate. My team here in Cape Town and the team in Pretoria. I'm sure most of you have heard from one of us, if not numerous occasions. I'm just going to sort of elaborate a little bit on what Scott was going on with regards to our products and our projects in the various areas. First of all, I just wanted to start off with by this disclaimer. It's to say that we're actually not financial advisors. We cannot give you any financial advice. You do need to sort of get in touch with your financial advisors if you want to do your own investing. And then with regards to the taxes, you also need to speak to a tax consultant. If I can just leave that there for 5 seconds. So, Wealth Migrate in numbers. We've got 111 members from 111 countries. We've had 1,770 plus transactions, and we've got investors from 44 countries. The average transaction is 41,000. As Scott mentioned, and this is obviously a slide that you had seen before, the minimum investment at this point is $1,000, and that can vary depending on the investor. Wealth Migrate in numbers, if you look at this, the group performance as of March 2018, you can see there's a significant difference between 2013 and 2018. 2018, obviously we only into the first quarter of the year, and you can see the growth thus far. Obviously leaves a lot to the imagination as to where we're going. The investment strategy. The favorite sectors, healthcare, industrial, data centers, multifamily, student housing, office downtown, office suburban, hotel and retail. As most of you all know, the healthcare industry is probably one of the most risk-free. Obviously it's not risk-free, but it is as risk-free as it can get. With regards to the healthcare, all the doctors, as Scott mentioned, will sign tenancies for up to 50 years. On the Medical 10 project at the moment, we've got tenants there for 99 years. And then the minimum is 10 years from an oncology unit. Why medical? An asset class, medical office buildings are recession resistant. When the banks crashed in 2008, people couldn't choose whether they want to get sick or not. It was obviously one of those things where the medical and the healthcare industry continued as normal. Long-term market fundamentals remain favorable for real estate investors. Doctors are generally good tenants with long-term leases due to high tenant installation costs. Obviously, as you can imagine, with numerous doctors' practices, they're going to have a huge amount of costs, not only for installations, but the actual equipment that are in these facilities are going to be ranging up to the millions, if not billions of doctors in the different counties, home counties. Tenant demand is fueled by demographic trends rather than economic growth. Within the broader US office market, it still remains an attractive niche in 2017. Benefiting from demographic trends, increased healthcare utilization, and spillover from ongoing expansion in the life sciences industry. The medical office building assets are well positioned to capture more foreign dollars in 2017 as buyers seek out high yields, but still relatively safe investment opportunities. Here's our medical track record. Again, I apologize if Scott potentially had gone into some of this information already, but this is Medical 8. Medical 8, the finance partner was Hattrick. Hattrick is going to be the same finance partner that's going to be joining us onto Medical 11, if everything goes according to plan. If you look at the returns, you look at the project returns, that was 8% per annum paid on a 2% quarterly dividend on a 5-year project. That's just closed. That was listed end of November. As far as I can remember, Jason? Yeah. Medical 9, this was another one. This closed on the 15th of December. This was another 8% per annum, and that was a 33.2% over 3 years, equating to just over 11% as a net return per annum. The first full cycle deal, exit and rollover deal, Wealth Migrate, the medical, the 1, 2, 3, and 5 are being sold as part of a portfolio strategy. That has actually, in fact, the equity has been raised on this project, but this is a good example. The project investor return at 17.81%. It's a great example as to where the boundaries actually are, if there are any boundaries in the sector. the Atlanta portfolio sale. So this was the portfolio sale in Atlanta, the 109,587. Am I doing a Zoomer? Yeah. Sure. 11, 18. Okay, so we'll move on to the other one. 18,200,000 on the equity available. And then the IRR of 17.81%. Obviously, most of our investors managed to get a hold of this project, and it was completely closed on this rollover deal extraordinarily fast. Our medical investments and performance, as you can see again, it's fairly similar to the previous slide. You can have a look there for yourselves on 2018 in the growth investments portfolio value. Medical 1, Medical 2, 3, 5, and so on. Medical 11 will also start bringing it back up, and Medical 10 after the renegotiations has also brought that figure significantly higher. So Medical 10, is there anyone here that has actually invested in Medical 10? Okay. And what were your returns, or what can you remember what the returns are when you made your transaction? Great, all right. So yeah, you can see what we've actually managed to do to close this project as soon as we can. We've managed to renegotiate on the deal. Here you can see the project is actually in Atlanta. Now Atlanta is the home of Mercedes-Benz, it's the home of Coca-Cola, and it is the next best option for Amazon to move their head office. Of which a good statistic is that 238 cities in the US put a bid forward to make Amazon their head office location. So that's going to bring 50,000 people into Atlanta, hopefully if all goes according to plan. Also Atlanta, if you had to put it into perspective, the size of Atlanta is around 20 kilometers by 25 kilometers. So if you have a headquarters of Mercedes-Benz, Coca-Cola, and Amazon all within that same area, there's huge growth and economy growth within the area. So this is the IRR. It's been increased to 15.02% as opposed to what you saw previously. Looking at that 8%, paid in a quarterly dividend of 2%. The increase, what we managed to increase previously, the return was 33.2%, and now it's gone up to 39.3% on the renegotiation from last week. So all our investors are extraordinarily happy, and again, it's managing for us to close this deal as soon as we can. That's the location. You can see the facility. You can see it's established. It's already existing. It's been in operation for 3 years. So what we're actually doing is we're going to purchase this facility as an already existing investment. So the doctors, the surgeons, and all the GPs that are actually in place already will actually become our investors, tenants. And that's where your quarterly distribution comes from the rental income that we yield. Now, like I said before, the least amount of time on one of the leases for the doctors is an oncology unit, which has 10 years left on their lease. There's one lease up to 99 years. And being a 3-year project, it really does sort of give us security in knowing that the doctors aren't going to go anywhere. Excuse me. So super important to go through what the risks are, because as any investment has it, there are obviously going to be risks involved. The risks involved, or the potential risks involved, is failure to honor lease obligations. Now the mitigations is that the tenant credit checks have been done, reputable medical tenants, solid financial positions of tenants, long-term lease, and then the debt cover ratio allows 25% decrease in revenue. Now, I don't know about you, but as I said, when Lehman Brothers went down in 2008, it wasn't necessarily a crisis in the medical industry. The hospitals still remained, as Scott said, there's still hospitals, maybe not his doctors there anymore, but the hospital's still there. Interest rate risks, inflation, federal raising rates, basically the mitigation is the fixed interest rates that was pre-negotiated with the finance partners, the valuation risks, the economic conditions, lower gearing, DCR averaging, and then the strongly capitalized lenders. Like any investment, there's going to be the risks, as Scott mentioned in the Kensington, but our due diligence team do everything they can to make sure that this doesn't happen. OzProp So this is the cold storage that was mentioned earlier. This is just outside Brisbane. Basically, this is has an excellent reputation, a track record for sourcing quality real estate, decades of experience, a strong knowledge and contacts, and then successfully executed numerous real estate investments. Now, Ozprop, they've collectively got 50 years of experience. They're in a very niche market, and they sponsor the debt. It's very important for our partners to sponsor this debt, and it simply gives them sort of skin in the game to make sure that they're not going to go anywhere. The available pipeline of deals successfully managing properties. This investment, it's just short of 7,500 square meters of cold storage. The deal value is just short of 25 million, and the equity available is 2.745. The duration is going to be 5 to 7 years. At 5 years, we'll check the micro and the macroeconomics of the local area to depend on where we'll go from there. The IRR is 10.2%, and then after tax 7.15%. The investment income averaging 7.5% per annum before costs. Now, I think a lot of you will sort of ask the question as to why are the percentages different and why would people want to get involved with these percentages? Australia is the 13th most powerful economic powerhouse of the world. The stability in the country and the infrastructure and the transportation within the country allows for the people to have certainty, and not only that, but also in the future, if they were to move to Australia, there would be the options behind that. The EB5 investments and the US green cards. Now, we facilitate in helping our investors become permanent residents with numerous benefits. I mean, not only do you get involved in a project, an investment, but then you also will get the green card, or you and your immediate family. I'm not going to go into too much detail into this, but if you have any questions about it, you can speak to us and we can hand you on to the relevant parties to make sure that you can get the information. So these are our current deals at the moment. We've got the Ozprop in Australia, we've got Atlantic. The medical portfolio has now closed. We have now raised the equity. Medical 10, like I said, this has just increased. You're looking, if you had to work, I like to talk in real-time figures on how much you're actually going to get into your bank account. So if you were to invest, which I must also clarify, is you invest into each individual project. You don't invest, unless it's a portfolio sale, which is clustered into one, you will invest into each individual project, which would be either Medical 10 or Ozprop Logistics. With regards to Medical 10, the previous net return into your trading account should be looking at 11.033%. With the renegotiation, you're looking at 13.1% net return per annum into your trading account. The platform designed to maximize user experience and satisfaction. Again, Scott went into this, but basically, if you haven't registered if you haven't registered, then you go into Wealth Migrate, you'll set up your account, you'll complete your profile, and then once you've completed your profile with your KYC and your FICA documents, which you're trying to get sort of a bit of a fast track to ensure that you can get it done as soon as we can. But once you've managed to complete your portfolio, you select your investments, you transact online, and you manage your portfolio. Now, another thing I wanted to make clear to everyone is when you receive your dividends, that 2% or whatever that dividend is every quarter, you can take those dividends and you can distribute those dividends into other projects. So if we've got a project in the UK, which we will very shortly, or any other projects coming up in the US, you can take those dividends and you can diversify them. You can stick them into Medical 11, or you can stick them into Ozprop, or you can stick them into wherever you want. If you want to wait for maybe another 6 months, you can also do that. So it's a very straightforward way in getting onto the property market without having to speak to those 16 middlemen and the amount of fees that we normally do. Okay, I can breathe now. So what we're going to do, myself and Jason, we will be at that round table at lunch, the beginning of lunch. If anyone wants to talk to us, this is why we're here, and we can give you some more information. I've also got the brochures. You can have a look at who the tenants are. You can look at what the tenancy lengths are, and you can actually look at what the exact returns are. Thank you. Thank you, everyone.
Great.
Thanks so much.
Thanks so much.